Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 5:30 in New York. It is Thursday, 13th day of February 2020, and this is the daily report for gold and silver. We had a moderate showing to the upside in gold today. Precious metals were higher pretty much across the board. But the interesting fact is a series of fundamental events that are kind of layered on top of each other. What has startled me the most over the last couple of days were the recent statements made in testimony to the House and the Senate by Chairman Jerome Powell of the Federal Reserve. He used the word quantitative easing in a sentence in which he said he's willing to implement another round, I think for the first time since about 2013 or 14. I've gone through the literature and the chronology of the series of QEs. This, of course, would be QE5, but that's the first time we heard that mentioned. And the fact that that's being mentioned when we've had reports today that the coronavirus continues to spread, has no treatment, and could get much, much worse before it gets better, and that the budget deficit for January was sitting at 33 trillion. If you recall, by the end of 2019, we were close to $1 trillion. So 33 billion is a large amount to add to that. And I think that those factors collectively is what has prompted the Federal Reserve to get into a very defensive stance. We'll talk about that during the show and over the remainder of the week. But first, to the price board. Moderate gains in gold today, resulting in about a 0.5% gain, $7.40. You can see that currently we have April futures sitting at $15.79 even. Platinum, that was up about 0.5%, $5 at $972.20. Silver up 0.7% at $17.62, and palladium continues to climb, up $19.70 at $23.42.20. I believe that is the highest close on record. We'll look at a chart when we pull up our technical studies. Traders, we did see gold secure a pretty nice showing today, up a little bit over $7. We are now in the afternoon session, as I call it, in Honolulu, which means that it is just opened in Australia. Currently trading unchanged to up 10 cents at 1578.80. If you look at the daily chart that I've put up on the screen, what we notice is that we have, without a question of a doubt, a continuing level of resistance that is drawn by this former support line against these lows, and now it is acting as a resistance area. But I've also added a couple of other trend lines, one going from approximately this high to this high here, creating a downward slope, and that creates another resistance area. And then we're also adding our support area, which is simply drawn from the series of higher lows that have come in recently. So while we could see this market trade within this channel, that would be very bullish indeed. When it broke either above this or above this line, that would definitely be a signal that it probably made sense to enter the market. However, as long as we are staying underneath this area, we are, without a question of a doubt, trading in a consolidating and sideways pattern. But, and most importantly, is the fact that we are now looking at a compression triangle. And as you know, that is something that I follow very, very closely. And the reason that I follow it so closely is because it tends to not only indicate when a sideways market will break out, but it is that release of energy that comes in once it breaks. The other thing that I like about the possibility of a compression triangle here is that typically, just as we saw right here on the last compression triangle, when it does break, it tends to break hard, and you get that release of energy. Look at this. The market was at about 1480 and went as high as 1613, although this was a little bit exaggerated. So what that tells me is that we do not have concrete confirmation that it's time to enter. I certainly wouldn't sell the market here. If I was a physical buyer, I would continue to accumulate, but as a trader, I need to wait to see it move above the two areas we have just spoken about. But what is unusual, or noteworthy, I should say, is the fact that when we look at our weekly chart, this is our effective close here, and let me just draw a straight line across it. We have definitely seen palladium trade higher. No question. You can see the highs right here and all of these tops. But these are red-bodied candles, so even though they opened above this line, they closed well below it, which means that the particular pricing we are looking at today, and basis a weekly chart, is an all-time new record high. As I said, I believe that it could go much higher, but here's what I'm looking at in terms of strategy. We had a couple of areas in which we had pretty much straight linear moves up. You can see that right here. It's not quite parabolic yet, but it's a pretty strong tack. Here it's almost parabolic, but then we had dip, a small rally, a dip, and now we're back in rally mode, which tells me that prices are trying to consolidate in the area, and I would look to enter this market not following a break to the upside, although I might consider it on a new high. What I'm really hoping to do is to see this market dip down a little bit, back down to the area of approximately 2150, and that's where I would like to enter a long palladium position. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.